Hi, everybody. Tom Gile at the Gile Group. Hey, I want to help you kind of navigate what's going on in the housing market right now because we're seeing some mixed signals. We've got buyer activities down, inventory's up, prices are sticky. So watch today's Gile Report and Tom's take because I'm going to go over what's currently going on in the market and just give you a little bit of what I expect to see moving forward as we move further into 2024. So let's dive into the latest market information here in the Portland metro area. And the first thing we're going to take a look at, we're going to look at both listings and sales activity. So when we look at the month over month numbers here, both listings and sales are up. That really has to do with seasonality because, we're typically slow in January and we continue to decline from there. So what's more important for us to look at here is the year over year activity. And when we look at listings are up 18.2%, while home sales are down 10.5%. Even though sales are down, inventory is actually down a little bit from where it was at in late 2023. So if you look at where we're at today, we're at just about 2.7 months worth of inventory in the metro area. That's down 12.4% from where we're at in January. And year over year, our inventory is actually up 13.3%, which makes sense when we talk about sales trending down overall. Prices are sticky. So take a look at this. When we look at 2 years, there's a slight negative trend in pricing, but really over the last year, we're up 1.4% price wise. Month over month, we're up 2.2%. So prices, like I said, are still sticky, even though we're seeing some slower buyer activity and higher inventory than we were a year ago. Mortgage rates, we've got to talk about those, obviously, because they've been a big driver in what's going on in this market. They are at the average rate in the U.S. right now is 6.63%. That's up about 25 basis points from where we were at a month ago. Year over year, we're up about 54 basis points. So that's a 0.5%. When I talk about basis points, basically consider those as portions of percent. So mortgage rates are up. And we'll take a look at this graph here. And we can see when mortgage rates go up, we do see a decline in sales volume. But conversely, we also see sales volume start to pick up when mortgage rates drop. And this graph does a great job showing that when mortgage rates peaked in November, they started to drop. We started to see some increased activity as we're coming into the year now. So here's my take. We're seeing a pretty strong correlation between mortgage rates and sales volume, like I was just talking about. Unfortunately, the Fed pushed out a potential rate cut in March. Thus, I think we're going to see rates in the short term stay near current levels, although we're still hearing that the Fed plans on cutting rates as we get further into 2024. The majority of the buyers that we're seeing in this marketplace right now, interesting, they're moving for a specific purpose. We've got people that are relocating. We've got people that also are relocating to be near family. So they have a very specific purpose in mind, as opposed to people just kind of making that step from one house to another. Despite the increase in inventory, higher mortgage rates, and lower demand, like I was saying, home prices are sticky, and they're up about 2.5% from last month and about 1.4% year over year. So we're still seeing price appreciation in this market. And probably the most interesting thing, and we've run across it with both our buyers and our sellers, it just continues to be desirable, well-priced homes are selling fast in this market, and we're seeing multiple offers. Not like what we're seeing in 2022, where we had a lot of offers, but you may be up against, 2, 3, 4 offers if you're looking at a really great house. So as a buyer, you need to be prepared for that. As a seller, that could be some good news too. I think as we move into 2024, we're going to continue to see volume continue to pick up. Part of it seasonality, part of it we're going to get some rate relief. So I think, as we get into 2024, the market is just going to continue to climb from where we're at now. So if you have questions or want more information, reach out to us. Ask the Gile Group. You can send us an email at askgilegroup.com. At askgilegroup@gilegroup.com. Reach out to us on social media. Give us a call. We'd love to hear from you.